So, new week, new records, but still the same mix of excitement and nerves on Wall Street. Hey everyone, it's Tuesday morning, July 22nd, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we begin, today's episode is brought to you by AMF Capital. For smart investment solutions and high-quality funds, head over to amf-capital.de. If you enjoy the podcast, please rate it wherever you're listening, and make sure to subscribe if you haven't done so already. All right, let's get to it. So here's the deal. Monday was a mixed bag. The tech-heavy Nasdaq gained about 0.4% after last week's monster rally in growth stocks. The Standard & Poor's 500 added a tiny 0.1%, but enough to close above 6,300 for the first time ever. The Dow? Pretty much flat after trimming some early gains. Now, why the cautious tone? Well, we're heading into one of the busiest weeks of earnings season, and it's all about big tech. Alphabet and Tesla are up on Wednesday, the first of the so-called Magnificent Seven to report for the quarter. If those numbers are strong, they could justify these stretched valuations. But if not, let's just say investors are nervous about anything that smells like a tech bubble. Then there's trade policy drama simmering in the background. Trump's August 1st tariff deadline is still hanging over markets. Over the weekend, his Commerce Secretary called it a hard stop for compliance, though he hinted talks might continue beyond the deadline. Meanwhile, the European Union is preparing for retaliation if a deal isn't reached, even considering an unbalanced agreement just to break the deadlock. But Trump's hardline approach and pushback within the EU aren't exactly helping hopes for a last-minute pact. Earnings outside of big tech kept things interesting Monday. Cleveland Cliffs smashed Wall Street's expectations, with steel benefiting from Trump's tariffs. Verizon posted solid quarterly numbers, lifting the stock, and even Domino's Pizza delivered better-than-expected sales thanks to new products, showing that U.S. consumers are still spending despite the uncertainty. And here's a fun stat. Of the 59 Standard & Poor's 500 companies that have reported so far this quarter, 86% have beaten analyst expectations. Sure, the bar was pretty low, but still that's a strong beat rate. So yeah, records for Nasdaq and the S&P, mixed earnings, and tariffs still looming. Buckle up. Big tech is about to set the tone for the rest of the week. That's it for today's Capital Markets Quickie. I'll be back tomorrow morning with a brand new episode. Don't forget to subscribe, rate the podcast, and share it with your network. Thanks for tuning in.